What up, good people? All right, listen. A lot of you already know by now, if you're looking at plenty of my videos, that I do double tops and double bottoms for the most part. And if you don't understand what that is, it's just really revisiting a supply and demand zone. So, of course, if we got a double bottom, that's just nothing but demand zone being revisited for the most part. But I want you guys to take a look at what it would look like if we were to actually take trades on the daily chart. So this would be some good setups for people who are swing traders. It's going to take a lot of patience. It's going to take a lot of grit, and it's going to be scary. But if you can do it, if you can work on it, you may have something, right? Let's take this move that we got, from here all the way up to here. I measured it before, so it's not going to be the same, but it was around 687 something pips, depending on where I pulled it from. But I did some math. If you were able to scale in and take three standard lot sizes, so it'd be $30 per pip, you'd have made close to $20,610. And this was March the 23rd. So let me move this out of the way for you. So see down here at the bottom, I'm sorry, March 24th. We had a nice little pin bar action. All right, we engulfed. So let's just play really based off the rules. Some people, like, as soon as the double bottom is formed, they like to get in the trade. You got to be careful on that daily, because we got this right here. This would have been a double bottom, right? See here. It probably would have shown, right? So if you would have got in, you would have had an 88 pip drawdown before it then rallied. Now, if that's the case, you're probably going to be on a different lot size, right? So you definitely can't go too big. If you did at a standard lot size, you're down almost, what is it, 8 grand, something like that. What was it, 88 pips? Yeah, let's see, 88 times 10. I'm sorry, $880. Math all on. Now, that's all right. Depends on how big your account is. But for me, I definitely am not going to go to a standard right off the bat. But I'll scale in. But let's say over time you scale in, you get up to 30 lot sizes, but at different various entry points throughout this move. I mean, that's over 600 something pips. It's a lot of money that can be made. So we get to our standard neckline here on May the 1st. So of course it's going to take you over a month. But who's making $15,000, $20,000 in a month based off of really truly risking, like I said, maybe between $800 to $1,000? So if you can really say, hey, I'm risking between 800, maybe 1,000, and then let's say we just go with a decent, lot size, my entry point to here up to the neckline, that's 546 pips. But if we want to risk $100 off a standard lot size, well, no, let's go even lower. Let's say it's $100, but we're going to use maybe a $5 lot size. You do $5 times 546. I mean, you made $2,730, risking basically $100. That's still not bad. So you see what it looks like on a higher time frame. Look at the GPP. I think I saw one on that one before, a couple of weeks ago. I mean, so here, this was January. We had a double top, and then it took all the way to March 7th for another drop to the neckline. All right, so we get here. It's another 616 pips. Now, imagine when you hit your stride, you're doing very well, you're good, and you can go heavier once again. So 500 something pips, you do $30 lot size, because this is when you really have hit your stride. I mean, that's over 15 grand, $15,900, right? Let's look at another one. And so we got something that's trying to play out right now, right? So what, May 8th, right? On a Monday, look what we got. We got this and like so many people just chilling and not. I really don't even care. Anyway, 269 pips. That's what you are at right now. So if you did a standard, I mean, you up 2,600, and this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11 days. Not bad, right? Now, if we can get all the way up to the neckline, 345 from where we currently are. And if we go ahead and finish this out, if we can get up and finish it, we got an extra 85 pips to the area. But look right here. This was February, and then by March 6th, played out. All right, we had a double top. Could took this down to the neckline as well too, and this one even went on down to the target. But from here to here, we had an opportunity on the daily chart, and we're looking at 179 pips. Now you're seeing right before your eyes that you got a lot of opportunities that are shaping up on a daily chart. So you can trade the daily if you are a swing trader or you're someone who doesn't have time to look at the markets. But the beauty about Forex is that it's 24 hours, 5.5 ish, or 6 days a week. So Sunday from 5 to Friday at 5, all the way through, right? So you can pick different. So different sessions going to have different volatilities and volume coming in. The Australian session is probably the most, it's the weakest. So there's not a lot of opportunities there. You're probably going to range bound there. But the Asian and the London and the New York, you're gonna find your ways there. So if you know you work, you gotta get up early. Try it in London. London starts at, I believe, 4 o'clock in the morning. So you can go from 4. I'm pretty sure you probably don't want to wake up at 4 a.m., but maybe do 6 a.m. Maybe do 5:30. I don't know. But you between 6 in the morning and 7 in the morning, you can find some opportunities. But more importantly, you can also use your limit orders and your stop orders, and you could just go ahead and place them on the chart, and you know that, hey, if price comes into this area, my order is going to be executed, and we're going to keep it moving. It's as simple as that, right? Don't make the trading difficult. Get out your own way. Um, go through. Now, I'm using the indicator. You got to pay for this, I believe now. They may have some other ones on there. But regardless, you still should be able to see. I can take these indicators off. I still know what a double top and bottom looks like. You know, you can draw off your supply zones. Like right here, this would be a supply zone. You see how easy that was? I know this is demand zone. This is what price came out at last. This is the last candle before price rally. And look at what happened. This is the last rally. It came back into this zone. So this would have been a loading zone. This is a supply and this is the demand. I don't need a double bottom. It just makes it a lot easier where I can just catch it, see it, and then keep it moving. But I'm just keeping it simple, and I found a lot of success just trading these. A lot of people, for whatever reason, are making it difficult. So whatever you do tonight, just go and try this. Repeat it over and over. Who cares if you take a L? There's plenty of double tops and bottoms that have failed. But that shouldn't mean that you should fail at trading. That's just a trade that just didn't go the way you thought it was going to go. You got two ways a trade can go your way. It's either you're right on the bull side or you're right on the bear side. It's only a 50-50 chance. That's it. You only got two choices. There's no in between. That's it. So if you know that, now marry that with looking for patterns that's going to give you the highest percentage of success. And you just repeat the process over and over. Hit the like button. Subscribe if you haven't. It's your boy E White. I'm out.